Based on the historical data and forecast, Bitcoin shows a slightly downward trend. The RSI consistently fluctuates around the mid-range, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show the price oscillating within a range, with the lower band frequently touched. Considering the forecast for the next week, the price is expected to continue a downward trend, potentially reaching $85,700. Therefore, I recommend a short-term contrarian strategy. I suggest entering a long position at $86,300, anticipating a bounce from the support level of $87,200. Place a stop-loss order at $86,000 to limit potential losses if the price continues to decline. Set a target price at $88,000, aiming to capitalize on a potential rebound towards the resistance level. This strategy combines the support and resistance levels with the Bollinger Bands and RSI to maximize potential gains while minimizing risk. This position should be held for a short duration, approximately 1 week, to align with the forecast period. Based on the historical data and forecast, Ethereum has been fluctuating within a range, with support at $2,830 and resistance around $3,000. The RSI has generally been below 50, indicating a slightly bearish momentum, but it has not reached the oversold level of 20. The Bollinger Bands show that the price has been approaching the lower band, suggesting a potential for a bounce. Considering these factors, I recommend a cautious long entry strategy. We will enter a long position at $2,850, placing a stop-loss order at $2,830, right at the support level. The initial target price will be $2,900, aiming for a modest profit while respecting the current range. To refine this strategy, we will incorporate the Bollinger Bands and RSI. If the price touches the lower Bollinger Band and the RSI is near 35, it strengthens the buy signal. If the forecast shows a price of $2,840 on January 2, 2026, we can consider adjusting the target price to $2,930. However, a conservative approach is advised given the uncertain forecast. This combined strategy aims to capitalize on potential rebounds while mitigating risk with tight stop-loss orders, ensuring a high risk-reward ratio for optimal returns. Based on the historical data and forecast, BNB shows a downtrend with volatility. The RSI consistently stays below 50, indicating a bearish momentum. The forecast suggests a continued decline, with prices ranging from $837 to $819. Considering the support price of $829 and the lower Bollinger Bands, I recommend a contrarian strategy focused on short-term gains. We will initiate a short position when the price touches the support level of $829. A stop-loss will be placed just above the recent swing high at $835, protecting against a potential bounce. The initial target price will be $821, aligning with the forecast and the lower Bollinger Band. To refine the strategy, we'll incorporate RSI signals. If the RSI dips below 20, signaling an oversold condition, we'll enter a long position at $819. The stop-loss will be set at $821, and the target will be $832. This strategy balances risk and reward, capitalizing on short-term fluctuations while mitigating potential losses. The portfolio will prioritize the short position due to the prevailing downtrend, allocating 70% of the capital to shorting and 30% to the RSI-based long opportunities. The combined strategy aims for a high return profile by exploiting both the overall trend and temporary reversals. Based on the historical data and forecast, XRP shows a slight downward trend with support at $1.83 and resistance at $1.98. The RSI consistently remains below 50, indicating a generally weak momentum, with periods of oversold conditions below 37. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering these factors, I recommend a cautious short-term strategy focusing on capitalizing on potential bounces from the support level. I suggest entering a long position at $1.82, placing a stop-loss order at $1.78 to limit potential losses if the price continues to decline. A reasonable target price would be $1.88, aiming for a small profit while acknowledging the overall bearish sentiment. To enhance the strategy, I propose a blended approach incorporating RSI and Bollinger Band signals. When the price touches the lower Bollinger Band and the RSI is below 37, it indicates a potential oversold condition, offering a favorable entry point. In this scenario, enter a long position at $1.81, with a stop loss at $1.77 and a target price of $1.86. This strategy combines the volatility assessment of the Bollinger Bands with the momentum indicator RSI, aiming to capture short-term rebounds while managing risk effectively. The forecast data suggests a continued decline, so the target price is set conservatively to avoid overexposure. Based on the historical data and forecast, Solana shows a downtrend with consistent support at $119. The RSI consistently hovers between 33 and 43, indicating neither overbought nor oversold conditions. The Bollinger Bands show that the price has been approaching the lower band, suggesting potential for a slight bounce. Considering the forecast for the next week, the price is expected to remain around $120. Therefore, I propose a moderately bullish strategy. We will enter a long position at $120 plus $0, placing a stop-loss order at $117 plus $0 to limit potential losses. The initial target price will be $126 plus $0, aiming to capitalize on a potential bounce from the support level and a test of the resistance. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, we'll consider a long entry at $119 plus $0 with a stop loss at $117 plus $0, targeting $126 plus $0. Conversely, if the price touches the lower Bollinger Band, a long entry at $119 plus $0 with a stop loss at $117 plus $0 and a target of $126 plus $0 is recommended. This combined approach leverages both momentum and volatility indicators for enhanced precision. Based on the historical data and forecast, TRON shows a slight upward trend with periods of consolidation. The RSI consistently fluctuates around the 45 to 55 range, indicating a neutral to slightly bullish sentiment. The Bollinger Bands have been relatively narrow, suggesting low volatility. The forecast prices are slightly above the recent historical close, further supporting a mild bullish outlook. Given the current RSI levels below 50 and the proximity to the support price of 0.279, I recommend a long position strategy. The entry price should be $0.278. A stop loss should be set just below the support level at $0.277 to mitigate potential losses if the price declines. The initial target price should be the resistance level of $0.282, offering a reasonable profit margin. To refine this strategy, I suggest incorporating Bollinger Bands analysis. If the price touches the lower band of $0.273, it signals an oversold condition, reinforcing the buy signal. If the price reaches the upper band of $0.289, it indicates an overbought condition, prompting a partial profit taking or a tightening of the stop loss. For the final target price, if the price breaks above $0.282 and shows sustained momentum, we could aim for $0.285. Therefore, the combined strategy is to enter at $0.278, set a stop loss at $0.277, and target $0.282 initially, with a potential extension to $0.285 if the price breaks through the resistance. This layered approach balances risk and reward for optimal returns. Based on the historical data and forecast, Dogecoin shows a downtrend with decreasing closing prices. The RSI consistently hovers between 31.7 and 42.5, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility. The forecast for the next week predicts further decline, with prices potentially reaching $0.114. Considering these factors, I recommend a short selling strategy. We will enter a short position at $0.123, placing a stop-loss order at $0.128 to limit potential losses if the price unexpectedly rises. The initial target price will be $0.115, aiming to capitalize on the predicted downtrend. To refine our strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider covering our short position or reducing our exposure. Conversely, if the price touches the lower Bollinger Band, it might signal a temporary bottom, prompting us to reevaluate our position. If the price reaches $0.115, we will move our stop loss to the entry price of $0.123 to secure profits. We will adjust the target price to $0.114 based on the forecast. This adaptive approach combines trend analysis with technical indicators to maximize returns while managing risk. Based on the historical data and forecast, Cardano exhibits a downtrend, consistently trading near the support price of $0.344. The RSI values have remained below 50, indicating a weak momentum, and recently dipped below 30, signaling an oversold condition. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential bounce. Considering these factors, I propose a contrarian strategy focusing on short-term rebounds. We will initiate a long position at $0.332, anticipating a temporary price increase. A stop-loss order will be placed at $0.321 to limit potential losses if the downtrend continues. The target price will be set at $0.363, aiming to capitalize on a short-term recovery towards the recent trading range. To refine the strategy, we will incorporate the RSI and Bollinger Bands indicators. If the RSI rises above 30 and approaches 50 while the price touches the lower Bollinger Band, it will be a strong confirmation signal for a long position. The entry price will remain at $0.332, with a stop loss at $0.321. The target price will be adjusted to $0.366, aligning with the recent resistance levels. This combined strategy leverages both oversold conditions and Bollinger Band signals to increase the probability of a successful trade. The portfolio will prioritize this strategy due to its potential for high returns within a short time frame, given the current market conditions. Based on the historical data and forecast, Bitcoin Cash shows a slight upward trend with periods of consolidation. The RSI fluctuates between 45.8 and 63.5, indicating both oversold and overbought conditions. The Bollinger Bands have widened recently, suggesting increased volatility. Considering these factors, I propose a strategy combining RSI and Bollinger Bands to maximize potential returns. The first step is to wait for the price to reach the bottom of the Bollinger Bands, which is around $536, and the RSI to fall below 50, ideally around 40, indicating an oversold condition. This would be the entry point at $536. Place a stop-loss order at $530 to limit potential losses. The target price will be set at the resistance level of $601. We will use a trailing stop-loss strategy, moving the stop-loss up as the price increases, to lock in profits. The forecast data suggests a price of $598 to $614 in the next week, supporting the upward movement. If the RSI reaches 80 or the price touches the upper Bollinger Band, consider taking partial profits at $593, and then move the stop-loss to the entry price of $536. This approach allows us to capitalize on the upward trend while mitigating risks with strategic stop-loss placements and profit-taking opportunities. Based on the historical data and forecast, Wrapped Beacon ETH has shown a downtrend from December 13, 2025, to December 26, 2025, with a recent bounce. The RSI consistently remained below 50, indicating a prevailing bearish sentiment. The forecast for the next week suggests continued volatility, with prices fluctuating around $3,150. Considering the support level at $3,070 and the Bollinger Bands, I recommend a contrarian strategy focusing on short-term bounces. We will enter a long position at $3,130, placing a stop-loss at $3,070 to protect against a potential breakdown. The target price will be set at $3,160, aiming to capitalize on a short-term upward movement. To refine this strategy, we'll incorporate the RSI. If the RSI reaches an oversold level below 20, it signals a potential buying opportunity. However, given the current downtrend and the forecast, I prioritize the Bollinger Bands and support/resistance levels. Therefore, the primary strategy remains a long position at $3,130 with a stop-loss at $3,070 and a target at $3,160. This approach balances risk mitigation with the potential for short-term gains, aligning with a high-returns investment strategy on Wall Street. Based on the historical data and forecast, Aptos exhibits a downtrend with periods of consolidation. The RSI consistently remains below 30, indicating oversold conditions, while the Bollinger Bands show the price frequently touching the lower band, confirming the bearish sentiment. The forecast for the next week predicts a continued downward trajectory, with prices ranging from $1.54 to $1.52. Therefore, a short position strategy is recommended. We will enter a short position when the price reaches $1.6, setting a stop loss at $1.68 to protect against unexpected upward movements. The initial target price will be $1.54, aiming to capitalize on the immediate downward momentum. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, we'll initiate a short position at $1.52, with a stop loss at $1.54 and a target price of $1.45. Conversely, if the price touches the lower Bollinger Band, we'll consider a short entry at $1.52, employing a stop loss at $1.54 and aiming for a target of $1.45. Combining these signals, the most efficient portfolio will prioritize short entries when both RSI indicates oversold and the price touches the lower Bollinger Band, maximizing potential returns while minimizing risk. Based on the historical data and forecast, Near Protocol shows a downtrend with consistent support at $1.44. The RSI consistently hovers below 40, indicating an oversold condition, and the forecast predicts further decline. The Bollinger Bands also suggest a contraction, indicating increased volatility and potential for a breakout. My strategy is to implement a short position when the price touches the support level. Specifically, I recommend entering a short position at $1.44. The stop loss should be placed slightly above the resistance at $1.68, set at $1.69 to account for potential volatility. The initial target price is the next support level, which is approximately $1.34, based on the forecast. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. When the RSI falls below 30, confirming an oversold condition, and the price is near the lower Bollinger Band, it strengthens the short signal. I suggest entering a short position at $1.43 when both conditions are met. The stop loss remains at $1.69. The first target price is $1.38, aligning with the forecast. If that target is hit, I will move the stop loss to break even at $1.43 and set a second target price at $1.34. This portfolio combines the support level strategy with RSI and Bollinger Bands confirmation for higher probability and risk management. Based on the historical data and forecast, Cosmos Hub has shown a recent downtrend, consistently testing the support level of $1.94. The RSI consistently remained below 37, indicating an oversold condition. The Bollinger Bands show that the price is nearing the lower band, further supporting a potential rebound. The forecast for the next week predicts a slight upward movement, suggesting a possible opportunity for a short-term gain. Therefore, I recommend a long position strategy when the price reaches $1.95. Set a stop loss at $1.84 to protect against further downside risk, and target a price of $2.03 for a potential profit. To maximize efficiency, I propose a combined strategy leveraging RSI and Bollinger Bands. When the RSI falls below 30 and the price touches the lower Bollinger Band, enter a long position at $1.95. The stop loss should be placed just below the lower Bollinger Band at $1.84. The initial target price will be $2.01, aligning with the forecast. If the price reaches $2.01, consider moving the stop loss to break even to secure profits and allow for potential further gains. A secondary target price of $2.03 can be considered if the upward momentum continues, but be prepared to exit the position if the price fails to reach this level, protecting the gains achieved. Based on the historical data and forecast, Ethena exhibits a clear downtrend. The price has consistently tested the support level of $0.2, and the forecast indicates continued downward pressure, reaching as low as $0.194. The RSI consistently hovers around the oversold territory below 30, confirming the bearish momentum. The Bollinger Bands further support this view, with the price trading near the lower band and the forecast showing it continuing to do so. Therefore, a short selling strategy is the most appropriate approach. I recommend initiating a short position at $0.201. Given the strong downtrend and proximity to the support level, a stop loss should be set slightly above the recent high at $0.21 to protect against potential upward spikes. The initial target price should be $0.194, aligning with the forecast and providing a substantial profit margin. If the price breaks below $0.194, a secondary target of $0.19 can be considered. This strategy combines technical indicators and forecast data to capitalize on the prevailing bearish trend, offering a high return opportunity with defined risk management parameters. Based on the historical data and forecast, Optimism demonstrates a declining trend. The price has consistently traded within a range between $0.253 and $0.301, with recent days showing a downward trajectory. The RSI consistently remains below 50, indicating a generally weak momentum. The forecast for the next week predicts further decline, potentially reaching $0.239. Considering these factors, I recommend a short selling strategy. Entry price should be $0.253, coinciding with the support level. A stop loss should be set at $0.268 to limit potential losses if the price rebounds. The initial target price is $0.239, aligning with the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently below the moving average, indicating a bearish sentiment. The bottom band is around $0.242, which can act as a secondary support. If the price approaches $0.242, a partial profit taking can be considered. For a more aggressive approach, if the RSI dips below 30, indicating an oversold condition, we can consider adding to the short position at $0.249 with a tighter stop loss at $0.253. The final target price will be $0.239. This layered approach allows for capitalizing on both the overall trend and short-term volatility. Based on the historical data and forecast, Ether.fi has shown a downtrend with increased volatility. The RSI consistently fluctuates around the midpoint, indicating indecision. The forecast suggests a continuation of this downtrend, with prices potentially reaching $0.634. Considering the support level at $0.664 and the forecast, I recommend a short position. Entry price will be $0.685, with a stop loss placed at $0.664 to protect against unexpected bounces. The initial target price will be $0.634, based on the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition and a possible rebound. However, given the overall downtrend, I'll prioritize the short position. If the price retraces to the $0.664 support level, we will enter the short position. If the price falls below $0.634, we will adjust the target price to $0.6. This approach combines technical indicators with trend analysis for a more informed investment decision. Based on the historical data and forecast, Trust Wallet shows a clear downtrend. The price has been consistently below the center of the Bollinger Bands, and the RSI has been predominantly in oversold territory, frequently dipping below 30. The forecast for the next week further reinforces this downward trajectory, with prices predicted to continue falling. Given this trend, my strategy is to implement a short position. I recommend entering a short position at $0.795. Place a stop-loss order at $0.836 to protect against a potential reversal. A reasonable target price for this short position is $0.739, aligning with the forecast. To refine this strategy, we can incorporate the RSI and Bollinger Bands. When the RSI falls below 20, it indicates an oversold condition, which is currently the case. The bottom of the Bollinger Bands provides a dynamic support level. If the price approaches $0.736, which is the last forecast price, it would be a good time to close the position and secure profits. This combined approach, leveraging both the overall trend and technical indicators, offers a high probability, high reward investment opportunity with a clearly defined risk management plan. Based on the historical data and forecast, Tezos exhibits a downtrend with periods of consolidation. The support price consistently remains around $0.439, while the resistance fluctuates between $0.479 and $0.494. The RSI indicates oversold conditions, frequently dipping below 37.8, suggesting potential for short-term bounces. The Bollinger Bands show that the price is approaching the lower band, indicating potential for a rebound. The forecast for the next week predicts a relatively stable price around $0.441 to $0.456, suggesting a cautious approach. Therefore, I recommend a strategy combining RSI and Bollinger Bands. We will initiate a long position at $0.441, coinciding with the forecast price and the lower Bollinger Band. A stop-loss order will be placed at $0.435, just below the lower Bollinger Band, to limit potential losses. The target price will be set at $0.474, near the recent resistance level and the upper Bollinger Band. This strategy aims to capitalize on short-term rebounds while mitigating risk with a conservative stop-loss. The portfolio will be 60% long position, 20% reserved for market observation, and 20% reserved for quick adjustments. Based on the historical data and forecast, Chiliz shows a slight upward trend with some volatility. The RSI indicates that the asset is currently not significantly overbought or oversold, fluctuating between 40 and 65. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation, but the forecast prices indicate a potential for a slight increase. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the price touches the support level of $0.0336, setting a stop-loss at $0.032. The initial target price will be $0.038, aligning with the upper Bollinger Band. To refine the strategy, we will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we will enter a long position at $0.0336 with a stop-loss at $0.032 and a target price of $0.0376. Conversely, if the RSI rises above 70, signaling an overbought condition, we will consider exiting the position or tightening the stop-loss. The forecast data suggests the price will hover around $0.035 for the next week, so we will adjust the target price to $0.0364 if the RSI remains within the 40 to 60 range. This blended approach combines Bollinger Band breakouts with RSI confirmation for a more robust and adaptable investment strategy. Based on the historical data and forecast, DECRED shows a downtrend. The price has been consistently below the center of the Bollinger Bands, indicating a bearish sentiment. The RSI values have mostly been below 50, further confirming the downtrend. The forecast for the next week suggests a continued sideways movement around $15. Considering this, I propose a short selling strategy. We will enter a short position at $15.6. The stop-loss will be set at $15.8, just above the recent high and the upper Bollinger Band to limit potential losses if the price unexpectedly reverses. Our target price will be $14.8, aligning with the established support level, which represents a significant potential profit. To enhance the strategy, we will incorporate RSI signals. If the RSI reaches an oversold level of $33.3, we will consider covering the short position. If the RSI reaches an overbought level of $48.6, we will consider adding to the short position. This combined strategy aims to capitalize on the existing downtrend while mitigating risk and maximizing potential returns. This portfolio combines the Bollinger Bands and RSI strategies to create a robust and adaptive trading plan for DECRED.